Good morning, traders. Paul here with GammaEdge. Today is Thursday, the 26th of January. Let's get started. Pause your players here. Read to the very bottom here. If you agree, hit that play button. Summary for today. Market models are still on the long side. We did see an improvement yesterday. The cumulative tick is in a long status. This is actually day 4 using the ARCX model. And then the pattern is still a railroad up. You'll see that on one of the slides here. And we're in day 3 of that. Long term, cumulative tick ribbon, which is the colored ribbon that we usually reference to say where are we in reference to the past, is long. We are on day 7 of that, and that's getting a little long in the tooth, but we can go much, much longer. We've gone months before, so just be aware. We talked about this last night on the open mic, but the 52-week new high, new lows continue to show bullish broad support. We just completed 16 days of upside expansion. This is really good. Shows that there is participation. Hopefully you guys have been playing this. This is a good confidence builder when you start seeing broad participation across the market. We will note that transition ranges have dropped. We watch the transitions very closely. When this occurs, it is a sign of short-term weakness. We want to see transitions move up. We covered this in some detail last night on the open mic, and I think the takeaway, I mean, we can, one step forward, 2 steps back type of thing, or 2 steps forward, 1 step back in a bull market. But we don't want to see continued dropping of the transition ranges. So today is really the first day that it's pulled back a significant and measurable amount, more than the noise. So definitely want to pay attention to this. I talked yesterday, revealed that we have this thing called a bimodal transition structure. So it's where you actually have 2 different transitions developing within the structure. This is important because between them, it's a little weak, and if we fall between these 2 or if they merge, it'll be to the downside. You'll see this on the last slide. It'll be very evident. There is a significant amount of call delta and gamma vaporizing between now and the end of next week. The bears could use that as a leverage point and become emboldened, especially if we start seeing those call deltas not being replaced. So the bulls really need to step up here, and we'll see what happens. We'll measure that, by the way, by obviously calls going in, short-term calls going in, gamma structure moving upward, as well as the transition ranges moving upward. 40.65 to the upside remains a difficult line to close above. It's not out of the question. Are seeing some indications that even higher than 4100 are starting to come into play, but 40.65 is looming. So I want everyone to review today's transition levels for the downside plays, but 40.65 looks to be today's upside limit into the close. We are short-term bullish. I don't want to give you the impression that we're thinking about the downside as a play. We are not. But we are seeing a few cracks in the ice, and just want you to be aware that it's not all roses here. Taking a look at the cumulative tick model, as I said, we've got the CT up. I put the green arrows on here just to make it very clear. So even though yesterday we pulled back, great opportunity to entry. There's a video that Mike produced on that. Urge everyone to go take a look at that. And as far as our testing and our overall signals, this is still a go for throttle, or a throttle up for go here, right? So we're in great shape. A little extended. When we get high, we typically pull back a little bit. So want to be cautious of that. If we do pull back, it'll be the same thing. We want to pull back to a range that remains above kind of historically where we flip. We're not anywhere near that. We are in this railroad track up pattern, which you can see has been continuing. So all in all, if you see an opportunity to enter, go ahead and do it. No new signals, as you just saw, appearing on the list, and I've added what our provider shows as the ER dates, earnings. So you want to check this. I have not verified this against the actual company websites and reporting and things like that. This is just a first guidance here. Don't do anything without doing your own due diligence. Nothing we say here is a recommendation to buy or sell anything. Paper trade only, of course, just so that you can learn how to do your due diligence. But two scans that we like, are the 0 to GEX to P-trans, and then P-trans up to PGEX. We think these are candidates that will be good, and you can size accordingly and give yourself a little bit of time to get there. Taking a look at the overall levels, really no change across the board. Everything remains constant. Slight increase here in put open interest in the PM complex, which is normal. That shows that some puts are going in way down below. The overall structure hasn't changed. Are seeing a little bit of an increase in the expected move. This expected move is a conservative value. It's targeted towards our premium sellers. So above these ranges are most likely safe for the short term. But just be aware, we are seeing a little bit of a creeping up from yesterday and from the previous day. The overall PM complex here, transition has dropped. That is generally a little more weak when we start seeing things drop down, but note the overall delta structure is still very much call dominated. We're in pretty good shape. Here's that 40-60, 40-65 zone. It's not really improving in the PM structure, so just be aware the bulls are not targeting, not neutralizing this. What we would want to see is this negative number here, which is representative of short calls that are at the position. We would want to see this get less negative, go more positive, so 25,000, minus 25,000, minus 20,000, etc. We'd also see these numbers go more positive and eventually turn green. We are not seeing that. To the downside, that 38.85, 38.90 area looks to be an area to play with. The 39.35 zone has transitioned just a little bit. It's a little bit weaker than it was yesterday, which is good. We like to see this, so we may have some improvements that are occurring here. But overall, the PM structure is showing that we've got an upside bound. We could probably have a low side bound. 3900's in play here, and we would not be surprised if we pulled back towards these transitions. 0 DTE, just want to draw your eye. These lines are going to be in play for today. Just keep that in mind. Also note transition is very narrow, very defined, and generally that's a good thing. 1 DTE, we have a significant amount coming off tomorrow. A lot in the complex is vaporizing, so just be aware of that. It's a net call expiry. You can see this is all what is vaporizing in terms of the call structure. A lot of deltas are coming off between today and or not between today and tomorrow. You'll see that on the next slide. Tomorrow, and so that's meaningful. The bears could use that as a leverage point, like I said, or the bulls need to step up and do something here. We note that transition has dropped lower. There are a couple pockets that would be natural areas for spot price to drop and hide into the close. Looking at the balance of the week, very well-defined transition structure. We're just above it. Here's that 40-50 line. So today and tomorrow, these are the plays, right? So we could potentially pin up here. We could park in a transition. The 39.50 zone is in play. You can see today and tomorrow a lot of calls coming off. Net positive, which is a call-dominated gamma, and a call-dominated delta structure all the way on down there to 38.85. So this all has to get replaced if the structure is going to remain intact, so the bulls need to step up. Taking a look at the combo complex, really no change from yesterday, except we've got a widening of this, what I call that bimodal transition structure. When we see this, we're starting to see a little bit of weakening below us. Think of standing on the beach and sand eroding underneath your toes there. Not anything to be overly concerned about, but it's something that we're watching. Ideally, we wouldn't have this bottom one. We would see this continue to advance up. The fact that we're not seeing the transitions, especially in the combo complex, which is the full SPX AM and PM settled structures, is a little worrisome. We like to see progress. We like to see a movement up, and when the transition structures drop, and we see a growing node, series of nodes down here, it's not out of the question that we could actually see these merge, which would not be the direction we want to go for a long-term bull here. So just be aware of that. Taking a look here, this is the visual I was talking about up front. You can see the transition structure is getting quite loose. We're starting to grow some of the, we're at the same point we were 3 points off here. So it's very possible we could certainly push higher here. We're pushing away from transition. That's not normal. That suggests more exposure for the dealers, and it also is suggestive of a potential reset back to the transition. It's the most healthy in our observations when we stay on the upper side of the transition range and we use that as a springboard day or two, taking advantage of whatever pushes us north. And then we have a little bit of, after 2 or 3 days, we pull back to the top of transition, we pause, we consolidate, and then we do the whole thing over. Meanwhile, the bears start closing their downside because they realize that they're going to be out of the money as this number comes up. Remember, all the puts above us are in the money. And so as spot price moves up, the in the money puts now become at the money and then out of the money. So the bears start closing. And then the people who are speculative on calls, which these are all the calls below spot price are in the money. The speculation to the upside, they keep adding calls as they make money, and that success begats success. We're not seeing that here necessarily. We're staying up here. Transition's getting a little sloppy. It's that bimodal thing that I was talking about. Plus, we're bounded with some JPM things. This is the end of January here at 41.45. The 40.65 is the end of March, but it's 3 times the size of this, not in just magnitude here, in the number of contracts. 41,600 originally shorted up here. This was 13,600. They're a little less now. They've been adjusted downward, but just be aware that we've got these illiquid areas sitting out there, and they do affect gamma and they do affect delta within the overall structure. To the downside, 3,800, here's that 39 line, and then you can see the 4,000 has grown a dramatic amount from yesterday as the speculators came out. Here's the 40.50 line, which we think is very possible we could be trading against, and then the 4,100 to which is still the right goalposts. So that's it for today. The takeaway is we're bullish, but we are cautious here. There are a few cracks in the ice that are not normal, not part of the normal sequencing, and we want everyone to be aware of that. We talk about this on open mic, and we also talk about it in the normal Discord. So I would urge everyone to come kick the tires. Go to this link here in the upper right-hand corner. There's a pricing tab. Fill it out. Come on in. 14-day free trial. Everything turned on. No risk to you. Come meet the team. Got a lot of great traders and folks who are doing good things. Follow us on Twitter at GammaEdges with an S, and then here on YouTube. If you like today's content, please let me know by smashing that like button. It gives me immediate feedback. And of course, want you to subscribe because Taylor, Michael, and myself are constantly producing videos, and hopefully you'll be able to leverage that information into how your style of trading and be able to get some insight on what we're seeing. So with that, I bid you farewell. Make it a great Thursday, and we'll hopefully see you in the Discord. Thanks, everyone.